Good morning. Welcome to Trading Hour. I'm Reema Tendulkar with Mia Surbi Upadhyay and Pavitra Parekh, and the volatility continues. It's a new week. It's Monday today. But the volatility is still very rampant in our markets. Right now, in the last 1 hour, we've seen the market sell off. The Nifty is now down to levels of 17,700, 150 points gone on the Nifty. The Sensex lower by 450 points. But today, the Asian market backdrop is also weak. The Hang Seng is down 2.3%. The Kospi is down 1.5%. Shanghai, Taiwanese markets are also roughly down close to about 1%. So the Asian market picture is a tad bit subdued. What's taking it on the chin are the global facing sectors. IT, the Nifty IT index is weak, and also the metal index. So names like Hindalco, JSW Steel, Tata Steel, these stocks have come in for some amount of selling pressure. IT too is subdued, but bear in mind the Nasdaq had a knock of close to about 2% in Friday. So there is that rub-off impact. And State Bank of India, very strong numbers. The management allaying concerns about the Adani exposure. But still, State Bank of India is down close to about 0.5%, and it's dragged the Nifty Bank lower with itself. The good part is today, the broader markets are holding up. So the mid-cap index is up close to about 0.5%, and the advanced decline ratio, at least in opening tick, is in favor of the gaining side. Hi, girls.
Hi, Reema. Hi, Pavitra. Well, yes, it looked like it could be perhaps not so wobbly, start to the week. But then what we're seeing on the screens right now is exaggerated selling pressure once again showing up. Banks were holding up so much better when the market started out at 9:15, but that picture is also changing. Again, the struggle is back around the 17,700 mark. Of course, Pavitra is going to run us through some of the major losers. But the fact is that the nerves continue. I think the issues we've been grappling with here at home. And to add to that, if we needed any more, if the bears needed any more ammunition, they got plenty of it Friday night onwards with, of course, the developments with the US jobs report, the way the yields surged, the way the dollar's rallying. So it's a bit of a heady cocktail as we speak. Metals, Pavitra, I guess, they're the ones leading the decline, but it's not really so sector specific. It's becoming a little broad-based, the sell-off that we're seeing right now at 11 a.m.
Oh, absolutely. I mean, today it is quite a broad-based sell-off, but the metals pack still has been under pressure, right? For this year alone, we've seen a 16% cut on the index. That is the kind of cuts that have come through for the metals pack. A few of the larger names will come up, so you can see the cuts coming through today. By the way, Tata Steel also posted its earnings today, so let's see how that one fares. But this space definitely in focus. Like Reema was pointing out, IT is a little bit soft today, but IT is also rallied already 6% since the start of the year, so do bear that in mind. What's doing well? FMCG holding up, the real estate index holding up a little bit, amid this very weak setup. And also what's important is that you still have a lot of these mid-cap names which are surging a lot in the back of news flow. So whether it's a Vodafone Idea, you have Indus Towers, a lot of the earnings coming through. So take a look at M&M Financial, DV's on the downside, JK Tyre on the downside. So there's lots happening, in terms of stock-specific action. Actually, let's kickstart the show with exactly that. Vodafone Idea shares zoomed 20% after the government has cleared the conversion of Vodafone Idea's interest dues. This is worth over 16,000 crores into equity. Reema, this makes the government the largest shareholder in Vodafone Idea.
Absolutely. So the first news is that the government has given its approval and the go-ahead that the AGR dues, which are owed by Vodafone Idea to the government, the dues are massive. They're close to 60,000 crore rupees. But the interest of those AGR dues, which amount to about 16,133 crore, will be converted into equity, which basically means instead of Vodafone Idea paying that 16,000 crore, they're saying instead hold equity in, Vodafone Idea. The conversion will be done at 10 rupees per share. And even after this 21% increase in the stock price, Vodafone Idea share price at 8.5 rupees is lower than the fair value, the face value of 10 rupees or par value as it's called. Now, why is this important? This has been pending for 1 year now, which basically gives the market the feeling that if the government has been deliberating on this for 1 year now, deciding whether they should convert, whether they should not, if they finally decided to go ahead, it means they're very serious about the future of Vodafone Idea. It shows the commitment to Vodafone Idea and having a strong competition, a three-player private market. As you said, the government will now be the single largest shareholder with close to about a 33% stake in the company. Now, while this is not fresh money which comes into Vodafone Idea, but what it does is it now gives Vodafone Idea the sovereign backing, the implicit sovereign backing, which perhaps will help Vodafone Idea go to the banks, refinance their existing loans, perhaps raise some more loans, which can help it clear the dues that it owes to vendors. one of the big vendors for Vodafone Idea is Industars, from where they lease their tower requirements. And Industars has been asking them to repay their loans. There has been a lot of hue and cry regarding it. So now the hope is that Vodafone Idea will be able to repay Industars. And while it's not publicly said anywhere, the speculation is that since the government has decided to back Vodafone Idea, it comes with the understanding that the promoters are also going to infuse some money. So the hope is that, the promoters have indirectly said that we will also be putting in some money into the company. What lies ahead? Promoter infusion, is that going to happen? To external funding, because Vodafone Idea has not started its 5G rollout while peers are racing ahead with the 5G rollout. That's going to be crucial. And thirdly, will we now see a tariff hike coming through from the industry? Just a quick word, what Bank of America has to say, BofA. They're saying the current government move drastically reduces any chance of Vodafone Idea going into NCLT. This is negative news for Bharti and Jio, as the pace of incremental subscriber gains from Vodafone Idea would likely reduce. The next event is tariff hike or not. With the government support coming in from Vodafone Idea, they reiterate their earlier stance that a tariff hike is coming, perhaps sometime this year.
We've been hearing that for a while, right? The tariff hike is there. But to be honest, I mean, Bharti did do that hike in, I think, 7 of its circles, at least.
So 2 in November, 7 in January. So total 9 out of 22.
Yeah. Okay, let me not deviate. That's a separate conversation altogether. But we're going to stay with Vodafone Idea. Now, this conversion to equity, of course, takes care of the AGR dues. But there is a mountain of debt that this company has amassed across the Indian financial landscape. So let's bring in Abhishek. He can jog our memory and give us a sense of this mountain of debt that we're talking about. It's a whopping 1.95 lakh crores. So Abhishek, help us figure out, I mean, who are the major lenders and, what's the different level of exposures like?
Well, Surbhi, the total debt, as you said, might be about 1.9 lakh crore. However, the debt to banks or the loans to banks is about 29,000 crores only. And this 29,000 crore forms about 0.37% of the loans of the lenders. So in amount wise, the highest debt owed to a banker is SBI 11,000 crore, followed by Yes Bank at 4,000 crore and IndusInd Bank at 3,500 crore. If you take a look at the percentage to the loans, the highest is to IDFC First Bank, which is about 2.2% of the loans. Remember that in the previous few quarters, IDFC First Bank has written down the provisions or has written back the provisions that they had on Vodafone Idea. So they were confident of a resolution taking place for Vodafone Idea going ahead. Yes Bank has about 2.1% of the loans and IndusInd Bank has around 1.3% of the loans. So percentage wise is what you should actually focus on, and in that IDFC First Bank, Yes Bank and IndusInd are the large players. Back to you.
Thank you very much for that. You said the overall debt is 2 lakh crore. It's actually 2.2 as of September. Most of it is actually dues owed by Vodafone Idea to the government, AGR, then the spectrum payout. The actual debt which they've borrowed from the banks, which they need to return, is what Abhishek said, right? Close to 29,000 crore according to his calculation. Get into a break. On the other side, we'll get you an update from the India Energy Week, also excerpts from our conversation with Fateh Birol of International Energy.
Welcome back. Well, the India Energy Week is underway in Bengaluru. Our colleague Manisha Gupta is there getting us all the action. And this time, there's a fair amount of green talk at this mega event. Manisha, tell us what's the latest.
Yes, guys, I'm at the India Energy Week in Bengaluru, and what a congregation of people around here. You have all the Indian ministers, the relevant ones, and of course companies, corporates and international delegates and investment conversations going around about here. There is conversation about on what has happened in the budget, where the thrust has been on green growth here. The new policies, regulations and the kind of government schemes that India has put out is something that most international delegates seem to be talking about. Also, this is coming on a background where you have seen the crude oil prices decline quite sharply from a high of almost $88 a barrel for the Brent prices. We're just about holding $80 right now. So that has been an $8 of a decline in last couple of weeks. So last week was nearly 7% of a cut coming in for the crude oil prices. Not just that, the natural gas prices are now trading at a 2-year lows. We've seen nearly 21% of decline in the previous week for this one. And with that, natural gas is now down by 37% in this week. Not just that, when you look at the overall energy as a complex, we've seen the gasoline prices declined by 6% in the previous week. The coal prices have come off from its highs, and we are trading at around 5 weeks lows on through that one as well. Coal has declined by nearly 20% in the previous week and down by 38% now for 2023. So while the markets are talking about solar, hydrogen, EVs, renewables, and the kind of investment that India can perhaps attract in all of this, this is under what the India Energy Week perhaps will put out on. And I will, of course, from here keep reporting on the latest developments, news and views.
Okay, thank you very much for that. In fact, let's listen in to Fateh Birol of International Energy Agencies, one of the leading voices in the energy space on global demand and the outlook for oil markets.
India is a major, single most important driver of energy demand growth. In 2016, I remember very well, I had another meeting with Prime Minister Modi. At that time, I told him, it was 7 years ago, 6.5, I told him that I expect, I told Prime Minister, that India will move to the center stage of global energy affairs. And today, India is at the center of global energy affairs in terms of being a major driver of global energy demand, as you mentioned, but at the same time, bringing renewable energy, bringing efficiency, new ideas, and being an important leader in the global south.
Dr. Birol, would you say that we are anywhere close to peaking crude oil demand globally?
I think we are not yet there, but at the same time, we are not far from that. Because when we look at a few indicators, for example, cars, which are a major driver of oil demand growth, there is a big trend around the world to move in the direction of electric cars. In the year 2019, almost yesterday, only 3% of all the cars sold in the world were electric cars. And last year, it was close to 15%, growing very strongly. And this is not mainly driven by the climate change reasons. It is an industrial policy in many countries. Just before coming here, I had a meeting with the top 20 car manufacturers of the world, the CEOs. And out of 20, 18 of them told me that they put the electric cars as the #1 priority in their manufacturing strategy. So this may mean that we may well see soon a peak of crude oil demand.
With the way the markets are working, and we are looking at perhaps tighter situations, especially in the second half of this year, with most banks and brokerages now saying that $100 could be coming back. How do you look at the directional move that the crude is looking at in sense of demand, supply and price?
I think the demand is already strong as we speak now. It's about 1.9 million barrels per day, about 2 million barrels per day we expect for this year. And half of it, of the global oil demand growth, will come from China. And China is the biggest uncertainty. If the Chinese economy rebounds stronger than we expect, then this could push the demand higher up. And in the absence of the producing countries putting more oil in the markets, this can bring the international oil prices a bit higher than today, which in my view would be risky for the rather fragile situation of the global economy. So from that point of view, we have to watch the markets, and if the Chinese demand is stronger than we expect as a result of strong opening up of the economy, and then there will be some job to do from the producing countries' point of view.
All right, that is the word coming in from Fateh Birol on the energy market, saying that India is actually the largest driver of energy demand, and also saying that crude prices are quite likely to remain a little bit tight. But that's the word coming in. We are going to get into a short break now. When we come back,
welcome back. Let's kickstart trading hour with a corporate conversation now. Route Mobile reported their numbers 2 weeks ago. Very strong Q3, revenue growth of 75% on a year-on-year basis. Margins too expanded by 180 basis points. Though in the conference call, the company said that Q4 could be a bit muted. Rajdeep Kumar Gupta, the MD and Group CEO of Route Mobile, now joins in to take some questions about the way forward. Mr. Gupta, morning. Rima here. Could you talk about Q4 and your expectations? In the conference call, you said Q4 will be a little muted. What is it that you expect? We understand one aspect is Q3 is historically strong due to the seasonality effect, the festive season, etc. But other than that, are you facing any slowdown, any headwinds?
Good morning, Rima. I think we're not facing any slowdown. That's a kind of business we are into. Q3 is always the best quarter for us, and I think that's a trend we have seen from last so many years. But I think that based on the current revenue run rate, I think we believe that we might be at the same level, maybe a little lesser. But I think the month of January was brilliant for us, and if February goes well, so I can't say it is going to be muted, but maybe the same kind of revenue what we did in last quarter.
Q4 revenues will be flat quarter on quarter, and volumes could also be about 27.7 billion, as you did in Q3?
It could be, because see, there is another opportunity we have seen, like we onboarded few banks in last quarter, and this quarter also we are onboarding one large bank. If those volumes started coming in this quarter, we might see the growth in the volume. But right now, since banking integration takes time, and we are not very sure whether it's going to start from this quarter or maybe from next quarter, if all goes well, so there will be a growth in the volume as well.
Mr. Gupta, can you break up your projections for the coming quarter between India and your overseas business? Where is it that you are expecting maybe, a little bit of softness or slackness?
So I think our overall revenue model, if you see, like 55% revenue comes from international and 45% comes from India. LATAM is a very big market for us, since we have deployed some of the salespeople in various markets in LATAM, along with European countries and Africa. So I think we see a growth going to come from Latin America and Asia, and Middle East as well. Recently, we acquired a CITIC license in Saudi Arabia, which means that we are now fully operational in Saudi Arabia, where we started onboarding customers in Saudi Arabia and Kuwait and UAE as well. So I think our volume and revenue mix is going to be largely from international. As I said, 55% going to come from international market and 45% from India, and that is a trend going to be maintained.
All right, 55 from the international markets. Mr. Gupta, thanks for joining us. This is Pavitra. Also a large part of your revenue came through because you have taken on some acquisitions as well. For now, if I look at just the organic growth for FY23, it's at around 35%. Can you tell us what the full year will look like? Are you looking at some more acquisitions which would aid the top line?
Pavitra, good morning. Definitely not. Like we acquired 3-4 companies in last few quarters, and I think our aim is to just make sure we start integrating these companies and try to create upsell and cross-sell opportunity within the company. And I think our focus is very clear now. We really need to build a product in-house, and we already built a product which we are launching in Barcelona, and it's a product on digital fraud. It is going to mitigate the risk of digital fraud in fintech industry, and that is one of the unique products we build in-house. And I think apart from that, we're also working on a voice side of a business which we are trying to build in-house. But right now, we don't have any acquisition plan, honestly, for next few quarters.
Okay, so the focus is on organic growth. Your average realization per billable transaction is now 36 paise. What are the drivers for your realization to improve, or can you just talk about how it should pan out from here on?
So we are working with operators globally very closely. Like we one large contract in Sri Lanka. We have already onboarded Telenor as a group. So if you talk about international market, there are various markets where SMS been charged as more than 13 to 14 cent as compared to India 10 paisa. So we are completely focused on those markets where the cost per SMS is higher, and I think that is a market where we have a very strong relation with operator. And with current like project in pipeline, we believe that this kind of contract is going to definitely work in our favor. And one need to also understand that Route Mobile, like if I send 1 million SMS in Bangladesh, is 13 cent, which is equivalent to maybe 50 million in India. So I think our revenue mix is based on the geographies and countries also.
Mr. Gupta, take that point. Obviously, you will chase markets where the tariffs are higher, specifically SMS charges are higher. But I believe you've also indicated that there is some discounting happening with larger customers where you do big volumes. Is that correct? And if it is, then what's the extent of discounting?
Not at all. I think if you see our firewall solution, like we have a company called 365. We acquired this company in 2017. We deploy our firewall with operator. We work very closely with operator where we actually try to monetize revenue for them. And in spite of once the firewall is placed, we in fact increase the SMS charges. Like there is no question of giving discount because I think Root Mobile works on a quality and the kind of platform which we have built in last 17, 18 years has a huge potential, and most of the customer using our platform is not just for one country, for multiple countries. And I think like classic example, all the OTT players, they connect Root Mobile for more than 30, 40 countries, each time.
All right, Mr. Gupta, we got that. Thank you very much for joining us today and taking us through the outlook. That is Root Mobile's strong set of Q3 earnings, like we pointed out, because of a lot of the acquisitions they undertook. But also, if you look at the organic revenue growth rate, that's also quite good at around 35%. The stock, however, has not really done much, right? I mean, Reema, I think for the year, it's down around 30%.
Absolutely, but this is one of the stocks which have run up so much, right? It's a big play on India's digitization. But Root Mobile's financials have been very strong. Every quarter, they've been upping their guidance. At the beginning of the year, they'd spoken about a 50% revenue growth. Then in Q2, they said we'll at least do 60% growth. And now they're confident that growth this year will be more than 70%. The stock has underperformed in the last 1 year just because it outperformed in the year prior to that.
All right, so that is Root Mobile. We are going
market, though the mid-caps are having a better session today, actually. That's the only little space of green. Some of the result reactions are being well received, but otherwise the market continues to be under pressure. Let's take the conversation forward with Anil Sareen, CIO of Centrum PMS. Anil, good to have you on the show. Thanks very much for joining in. So, it's kind of become a dual storm of sorts. We've had our own issues here with, a group of stocks. And now you have the headwinds coming in from global markets with the jobs report and yields rallying the way they did. What do you think? I mean, India's underperformance, is it going to continue for a while? Or do you think this is a great opportunity to go ahead and start buying?
I think it is the latter. We've had, from November onwards, we've had weakness, which continued into December and Jan also. And generally, we tend to follow the US. And if there is a distinct kind of moderation in the pace of interest rate hikes and the US market responding positively to that, then India should be doing well, but for these temporary factors that we are seeing now.
Okay. So in that case, since you are still quite optimistic on the way things are set up, what parts of the market would you look at buying right now? Would it be IT? Because there was a move that started at the start of the year, a move to go back into the beaten down names in IT, let's say, and there was some profit taking going on in banks. But then given the developments and the sentiment in the last couple of weeks, which areas are you looking at?
So, I mean, as a PMS, we don't have the luxury of moving in and out. So we necessarily have to look at longer term ideas. So over there, obviously, lenders have a role to play, technology or IT has a role to play. But by and large, we are doing, bottom-up kind of investing. In general, when there is buoyancy in the economy, and we have every reason to expect the buoyancy to sustain going forward, then individual ideas, the small and mid caps tend to do well. So if you pick your spots properly, I think we should be okay as we sort of, have this conversation towards the end of calendar year 2023.
All right. Hi, Mr. Sareen. Thanks for joining us. This is Pavitra. I just wanted to ask you, what do you think of the entire Adani Group crisis that is playing out? And do you see, how much of a risk do you see of this, really spreading? Because for now, at least it looks quite contained, right? Even the banks have pretty much held up.
Yeah, so I think enough very intelligent people have commented upon it. It seems to be contained. And I think even if you're a short seller, at some stage you would be closing your shorts out, right? I expect, I think sometime very soon this whole saga should end. It's really commendable to see how the market is, taking it in its stride. Initially, we were quite hurt by it, but now we seem to be sort of taking it in our stride as a market. And even the individual stocks, as these open positions get closed, there should be some kind of revival.
Mr. Sareen, you spoke about bottom-up investing, right? And this volatility, the fall that we've seen has given investors a lot of opportunity to buy stocks that they like. Could you give us an indication that in the last 1 month, where is it that you've done some cherry picking?
So we generally don't talk about individual stocks, but yeah, lenders are looking pretty interesting. Select auto names are looking interesting. We especially love, even though the results in some diagnostic companies have not been all that great, but they are, from a medium-term perspective, quite interesting. There are a few hospital names where, we can make very good returns. So over there, where we are a little bit unhappy is on the logistics side, but one will have to sort of wait and see over there. But these are the areas where we are seeing a fair amount of interest. And also, I mean, there are stocks which are into exporting to Europe and US, not only IT, but maybe they are into garmenting, maybe they are into some chemical, where they are taking it on the chin at this point in time due to what is happening in US and Europe in particular. So as a result, the stocks are down quite materially. So I suppose this would be a good opportunity to sort of look past the near-term issues and build positions in those counters.
And what about logistics? You said you were disappointed with the earnings from the logistics companies. Did you use the dip to buy, or are you still waiting it out? Or did you look to sell because things could get worse?
No, I think selling is not an option because, despite the results being not so great, they are still increasing market share. There is this whole dynamic, a medium-term dynamic, which is playing out, unorganized versus organized, which is going in favor of the organized players. So there is no reason to, become disappointed in such a short time frame. One will have to wait it out and see in the coming quarters how things are going, because we are hearing from multiple people that the calendar fourth quarter has not gone as well for consumption as it was initially expected. So one will have to be patient, but from a positioning standpoint, this whole movement, from unorganized towards organized is very much in play, and one should remain invested.
Okay, Mr. Sareen, we'll leave it at that. Thank you very much for your insights. Need to slip into a very short break. As we do that, here is some exciting news. The most coveted leadership awards are back. CNBC-TV18 honors the visionaries behind outstanding business. Welcome back. Ease My Trip has moved to the high point of the day. The stock is up 5%, reported numbers about an hour ago. Strong top-line growth. Revenue growth is at 57%. But remember, Q3 is historically strong for the company, given the pickup in travel. But another important indicator is that discounts have come down very sharply on a year-on-year basis. The discount as a percentage of their gross booking revenues is only at 3.1%. In the comparable quarter of last year, that number was more than 5%. So discounts have come down for the online travel agents, OTAs as they're called, and that's a big positive. But let's get you a Network 18 exclusive. Finance Minister Nirmala Sitharaman spoke exclusively to Rahul Joshi on two key macro issues. She expects the declining trend in inflation to sustain and says India's twin deficit problem is not as severe as before. Listen in.
The way in which inflation has come down, both by RBI's action and by the government's action, and the government's action has been steady and at it for some time. So I expect, since the fall in the inflation doesn't seem to be just a momentary or a 1 month affair, it should sustain itself in the process of coming down.
Any concern that you feel is there because of the twin deficit problems?
It's not as severe as before.
Yes.
Yes, when exports come down, you're going to have the current account deficit. But it's also now suddenly going up as well as it was before, a couple of months ago. Monthly fluctuations I say.
Yes.
Fluctuations should not worry us.
Trading hour, the next company and stock on our radar is KRBL. Now, the company reported a pretty strong set of numbers for the third quarter, and this was right from the top line onwards, growth in both parts of the business, domestic as well as exports. To find out some more details and to get a little more color on the performance and the outlook going ahead, we have with us Ashish Jain, CFO at KRBL. Ashish, good to have you on the show. Thanks for joining in. So I want to start by understanding this top-line growth that you've done, pretty solid, 33% growth, about 1,500 crores in revenue. How much of this is volume growth and how much is value? Because rice prices, particularly basmati prices, they've been going up as well, right?
Yeah, you're right. So we've been seeing the trends in basmati prices, I would say, for the past 3 quarters or so. And so to that extent, both trends are reflected in our growth as well. However, having said that, we are seeing strong volume growth, both on the domestic as well as at the export market. And I think an interesting data point to look at here would be what the country is seeing as a whole. If you look at basmati export numbers in the April to December period, volume exports of basmati have increased by 17%. So strong volume growth overall, which is reflected in our results as well.
And what's the kind of increase in realizations and prices that you've seen for your portfolio? If you could also give us an idea on pricing, both for the domestic business as well as for your export markets.
Yeah, so we've seen, if you look at it on a year-on-year basis, definitely the realizations have improved. We typically don't quantify that. Now, if you look at it from a business segment perspective, in the domestic market, we've not taken any price increases in Q3. We'll see how it goes in Q4. From an export market perspective, also the prices have gone up, and we kind of see this trend holding up at least for the next quarter or so.
Ashish, afternoon. On a quarter-on-quarter basis, your margins have declined, 18% versus 22%, and this is despite a strong top-line growth of 16%. Can you explain that?
Sure. So I think a couple of reasons. One is the product mix is different. So the quarter 2 had a larger share of exports in our overall revenue as against quarter 3. Second, our input prices have gone up. So if you look at paddy as well as rice, the input costs have gone up since quarter 2. And third is that we've seen some increase in expenses, but which is mostly volume related. So for example, we've seen higher cost of sales, etc., going up in quarter 3.
Okay, that is on the margins. Ashish, thanks for joining us. This is Pavitra. If we can speak just about the export markets, can you tell us what you expect there? Because sequentially versus last quarter, there has been a little bit of a decline. So can you tell us what you expect in terms of FY23 revenue? I think just for Q3, it was around 520 crores for the exports.
Yeah. Yeah, so there's been a small drop in exports as compared to Q2 of the current year. But having said that, our branded exports continue to be strong. Our largest markets, which are Saudi as well as UAE, are responding well. The drop that you see vis-a-vis Q2 is largely because there was a share of non-basmati export in Q2, which is not there in Q3. So that's what's caused the decline in Q3. We typically don't comment on overall, forecasts, etc. But like we mentioned earlier, we see the export side continuing to be strong, and therefore you will definitely see exports far better than what we saw last year.
So FY23 exports better than FY22, but just Q4 exports, will there be a pickup compared to December quarter?
Q4 is a key quarter for us because that's when we have Ramadan in the key Middle East markets. That's a festive season in that part of the world. So we are hoping to see higher orders, but let's see.
Okay. I also am picking up that your inventory levels are higher, right, when you compare it to what we saw in FY22. So can you tell us what is the average holding cost that you're working with?
Sure. Yeah, so, if you look at last year, we were sitting on relatively low inventories. That's because the prices were high. So in the current season, we've kind of provided for that. Also, like I mentioned, we are seeing strong volume demand. So we've built up inventories in expectation of that demand. So, overall, if you look at our inventory, it'll be about 15 to 20% average cost of purchase this year would be higher than last year.
What's the expectation on input costs in Q4? Because you indicated that Q3 input costs were higher, raw material and logistics. What's the expectation for input costs in Q4?
So we expect that trend to continue because, if you look at the last buying season, which we just completed in the middle of Jan, the paddy prices were up, and which is one of the reasons why overall rice prices are also up. like I mentioned, we don't see any break of that trend. So we expect continued levels of input prices in quarter four as well.
Will that mean margins in Q4 will be similar to Q3 or even lower?
Should be similar.
Okay.
All right. I think you would also mention that, your gross margin was a little bit affected because of a change in the product mix. Could you detail that for us? What is that change?
Yeah, so I think two things. One is that exports have a lower share in our revenue in Q3 as compared to Q2. And, the basket of exports is different from what we sell in the domestic market. So that has its own impact on the margins. And otherwise, it's general. I mean, it's a quarter-on-quarter change in product mix, nothing specific.
All right, Ashish, we'll leave it at that. Thank you very much for joining us and taking us through the outlook for your company going forward. Varun Beverages is popping on the screen. The net profit has come in at 75 crores versus 16 crores that we saw last quarter. The stock will also come up for you. It's seen a sharp spike after its results. That's the only figure I have now, but our team is flashing more from, the earnings that came through for Varun Beverages. The net profit figure, of course, looks strong at 75 crores. But on that note, from Rima, me and the entire team, thanks for tuning in. You have Halftime Report after this short break.